I'm Charlotte McLeod with the Investing News Network, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for joining me today. Great to see you.
Likewise, Charlotte. Thanks for having me.
Yes, of course. So excited to have you here at VRIC. And we're kind of following up on our conversation from last November, where one of the themes of our conversation was the worst looks like it could be behind us when it comes to gold in the resource sector.
Sure.
So into 2023, we have seen the gold price go up. Is this the real deal, do you think?
Yeah, so there's a lot of stops and starts since the massive rally we've seen, in the summer of 2020. And it frustrates a lot of investors because we seemed to take off last January, right? And into April, and then it faded pretty much the entire year. So, things work in cycles. Nothing goes straight up. And I think it's important to just be patient with the resource sector because it will produce returns over longer periods of time. But also, as we've talked about a number of times on your show, you can't just buy and hold and cross your fingers. That's not a strategy, right? You have to continue to look at news and be vigilant, looking at what's happening, talking to CEOs. This week alone, I spoke to 11 CEOs. I spoke to 4 this morning. It's constant communication to look at a piece of news and then talk to that person to understand the news better, so that I can relay that to my followers and clients. But yeah, I'm excited about the rally. Obviously, the timing of our last interview was pretty good, November 8th. And we've seen a pretty nice run in just about every mining stock ever since.
Right, and just since you mentioned you've been talking to so many CEOs this past week, maybe we can check in on where you are seeing those opportunities.
Sure, yeah. So in the gold space, I just met with someone for an hour and a half here, Cartier Resources, which is a newer name for us. We got in probably about 6.5 cents US. The ticker in the States is ECRFF. And one of the things I like about management is just being forthright and owning a lot of shares in the open market, right? Because a lot of CEOs will get shares through different things, but they're not buying necessarily in the open market. Philippe is a little different in that he's bought all 5.4 million shares in the open market alongside of an investor like me, which is good. When you look at their website, they have 7 million warrants out, but all of those warrants are owned by Agnico Eagle, which is a huge company that he's known for 30 years, he told me. So when you have that kind of partnership, 7 million warrants may look like an overhang to someone on the website, but when you ask the second question, they're all owned by that company that you have a relationship with, they're friendly, right? So it's getting to the bottom of those pieces of data that's important, and I do that through the calls. Another company that comes to mind is Ascendant Resources. Mark Brennan is the CEO of Cerrado Gold, but he's also the chairman of this company, and they're based in Portugal. They're a newer name for us as well. We started to buy in December, the internal rate of return on that stock, when you look at their 2021 PEA, is around 55%. So very strong numbers, low payback time. And when you flip through the deck, you can see that the cash flow expected from that project in the first 5 years is $80 million a year US. So for a stock that's trading at 19 cents, it's like you're looking at these opportunities right now. And if gold, to your point, does break out, meaning it breaks above 1960, it breaks above 2000, these little resistance levels that everyone's watching, I think you're going to see these type of names do very well.
Right, and of course, we always hear that ideally you want to choose stocks that will do well in any price environment for whatever metal they're focused on. But maybe we can talk a little bit more about where the gold price may go in 2023, what levels you're watching for, what factors you're really keeping in mind.
Sure, so remember that when we interviewed last, gold was trading around 1630, I believe. It's up to 1927 as we speak, so it's $300 an ounce. That's a big move, and yet people are still kind of frustrated. It's like that's a really interesting move here pretty quickly. So I think you're starting to hit a little bit of resistance in this 1950 to 2000 level. I think the Fed next week, February 1st, is going to be in the short term, driving direction, right? Driving the direction of the US dollar, hence having an impact on precious metals like gold. So, in the near term, it's anyone's guess. But longer term, we still are very bullish because remember, this 300-point move has come with nothing, no resolution in Russia, there's still the possibility of a China-Taiwan situation at some point this year, in our view. There's a lot of catalysts that could drive gold higher. Also, you've got the S&P remaining stubbornly high, right? So, I try to relay to people that in September 30th's close, the S&P was at 3586. It's well over 4,000 now. So it's been another nice move in the broad market. I think gold would benefit longer term to see the market pull back. And I think by summertime this year that will happen. But people are still, crossing their fingers, hoping that, earnings are going to go great. And I'm not seeing that. I'm seeing a lot of layoffs at bigger companies, right? We saw big layoffs at Salesforce, Coinbase, Amazon, Meta. I mean, these are big names. And so who knows what kind of an impact that's going to have on sentiment and the economy as we move forward throughout the year.
Right, and we did check in last time on possible recession in 2023. So let's get your updated thoughts there as well. Maybe you could tell us kind of about what shape that could take in terms of length.
Yeah. So like the Fed being data dependent, that's how I look at things. I never look out, 6 months, 12 months really in advance because we have to look at the data and then determine how things are going, right? As of right now, when you look at things like last week, GDP, really positive print at 2.9%. Will we keep seeing that 3%-ish kind of GDP number? I don't think so. I think the number is going to decline as we move forward this year, and then people will get more comfortable with the idea of a recession. And the Fed's got to do their part to try to combat that, right? So we have been one of the only gold and silver, influencers or portfolio managers, whatever you'd like to call us, that has been talking about higher rates and saying that rates would continue to go up into 2023. I said this on Kitco in March and June of last year. So, basically, you can still have, as you've seen, a really positive gold price environment, even though rates are, still stubbornly high. So I'm very bullish about our complex, going forward because, again, the equities have really sold off heavily since August of 2020.
You are definitely right. Instead of hearing about rates going up, we've been hearing more about that pivot of they're definitely going to turn around and go back down, maybe level off. So that's pretty interesting. I want to ask you as well about silver. So we talked about resistance at $23 to $25 per ounce. I think that kind of ended up being pretty accurate. So silver in 2023, what do you see there? Is this a year we get through that, maybe up to 30?
Yeah, so on your show in 2022, we were talking about silver holding that $18 to $19 level, which it did. It broke to 1760-ish, I think, like 1 or 2 days. But generally, that was right. And then we've been talking about resistance at 25, which, as you can see, we've tried to attempt 25 now a number of times in the last 2 weeks and failed each time. Not the best, in the short term, but this year I think silver will have a much better year than most people expect. It's interesting that there's still large institutions like Bank of America that have a $25 target on silver, and we're at $23.60. So it's like, there's still plenty of opportunity for these bigger institutions to get this wrong. I think silver is it's an untamed beast when it wants to be, right? It's like one of the only commodities like this where it just takes off without any real reckoning, real reasoning behind it sometimes. And we've seen that price move from, that $18 level now to 23 plus. And so, yeah, I mean, for us, 25 is problematic to some extent, but then 27 to 28 is going to be even more resistance. And then 30 is major resistance. And that's how we see it right now.
And you shared with us in the past some of your picks in the silver space. Any updates there that you could share?
Yeah, sure. I just had dinner last night with SilverX, Jose Garcia, and team have done a really good job there as a silver producer, and doing it. The production numbers they had just put out here in January looked really good to me, and they've attracted a lot of portfolio managers like myself into the stock and improved their shareholder base, I think, dramatically. The two speakers at that dinner were Brian London and Chen Lin, both of which are very well-known, speakers in the silver space, and they both are shareholders themselves. So I think highly of what they're doing there. The other name that I had for you there in silver, well, there's two. One could be Aftermath Silver, which is AAGFF. They are, in Chile and Peru, where SilverX is just, heavily in Peru. I like jurisdictions like that have been so, I don't want to say ignored, but I think a lot of people are scared by some of the news flow, and sometimes that's an opportunity, because with rising silver prices, both something like SilverX or Aftermath have a ton of leverage to the share price of silver going up. A third would be Guanajuato Silver, which is an interesting play in that they bought a lot of Great Panther's assets. As we know, last year the Great Panther had a really bad run of it, and they came in for around $14 or $15 million and bought a lot of their whole infrastructure, the projects. And they did the same thing, a few years ago with Endeavor's El Cubo complex. And so I really like what James is doing there, buying, things cheaply. As a value manager, we look for that.
Okay. And we'll make sure to find the tickers for everybody and put them in the video description. So we've talked a little bit about what's going on with the gold juniors, the silver juniors. I want to ask you about the junior resource sector as a whole. How is sentiment? I know you haven't had a chance to go down on the floor here very much, but you've been talking to all of them in these meetings. So how are they feeling in terms of sentiment, challenges, that kind of thing?
I think this move, this 300-point move in gold, has really helped to improve sentiment at the CEO level, but also at the investor level. I talk to investors every day, and they're much more encouraged now, right? Because they can see a light at the end of the tunnel. When we were talking last in the low 1600s, it was getting pretty difficult, right? Because we have major support at 1560-ish. And so we were, a lot of analysts were saying, hey, we're going to test that. We didn't, thankfully. So we made a higher low, but now as we sit here, I think people are feeling a lot better about things. As I said before, this move has come with no major news item behind it, right? It's just an undervalued asset, and people are starting to see the merit of owning physical gold or silver or buying the mining stocks like we do.
Okay, and before we turn the camera on, we were talking about the green transition, and so I'm curious to know how you are playing that, because there's a lot of different avenues that you could take. So what's your approach?
Sure. We like diversified companies, like something like Stillwater, which is called Stillwater Critical Minerals. They used to be called Group 10. Mike Rowley, the CEO, is based here in Vancouver. That ticker is PGE in Canada, PGEZF in the States. They just came out with news on Wednesday or Thursday of last week and showed a resource estimate where they were up like 62% over the last resource estimate, but really improved on so many different levels. They don't just find, palladium, which I think a lot of people, because I've talked about palladium with them before, remember them for, but they're actually 50% plus in nickel now. So they've got nickel, they've got cobalt, they've got palladium, they've got platinum, they've got rhodium, which is in very short supply. So I really liked their press release. I thought it was very well thought out, and think highly of that stock. In the copper space, because people think of that in the green space a lot. Copper, there's two that we've been starting to get more into here in the fourth quarter. World Copper is one, that's WCU in Canada, WCUFF in the States, and they have a project in Arizona called I think it's Topia, and then they have Zonia, excuse me, and then they have a project in Chile as well that's much larger, and it's called Escalones, and Escalones has got an internal rate of return of over 45%. Again, we look at these numbers and say, wow, when you look at Chile in general, most companies have an IRR of around 25 to 30%. So we think that could be an attractive takeover candidate for someone, because if they don't want to put it into production themselves, when you look at the peer group, there's nothing like that we've seen, and the stock is trading at 14, 15 cents US. It's extremely cheap. We also like Copper Lake Resources, which is based in Ontario. That one is WTCZF. The stock is drilling right now. We'll have some numbers out probably by mid to late February, so not a long wait. And one of my peers, John Kaiser, likes the stock as well, has talked about it a couple times last year. I think highly of the geologist there in Don, and Hoy is his last name, and he's been doing it 30 years. So it's like, when you have a big property like that, it's important to have a good technical team, because someone like Don will kind of steer people towards where to drill, and it's important because it can get very cash intensive if you're wrong.
All right, and copper is such an interesting one, because for sure, as you're saying, it's got this role in green energy. It also has its industrial side, which is, the big source of copper demand. And I know a lot of people are a little bit worried hearing these recession comments about what that means for demand for commodities like copper. So any comments on that?
Yeah, I mean, there's a definite correlation with the number one consumer of copper is China, right? So when you look at what's happened with Chinese news since we last talked, right? The main takeaway for me was when they went away from that zero COVID policy, right? That's when we started to get more interested in copper stocks, because copper has taken off alongside of Chinese equities. There's a high correlation there. So we saw copper tail off last year as China was not doing well in the first 6 to 9 months of the year, but then in Q4 really took off. Copper is getting a little ahead of itself right now in terms of price. I mean, it's crossed through $4 like butter. So we now are approaching that $4.50 a pound copper level, and that's pretty good resistance, And so if it breaks through that with some authority, though, I mean, $5 copper could be, a possibility within the next 12 months, which is very exciting.
Okay, very interesting. And as we're wrapping up, can you let me know if there are any other trends in the resource sector that you're going to be watching in 2023, or advice that you would really want investors to take to heart this year?
Sure. It's an old thing that I continue to do over and over again, which is put management first. I don't think people do that enough. We saw a lot of companies last year, I'm not going to name them, but say one thing and do another in the resource space, right? And it was pretty shocking, some of the different things that occurred, and I think you're going to get that in every sector, right? I mean, I don't think people would have estimated that Amazon, which was trading around $81 in March of 2020, it got to 83, I think, in the fall. I mean, it's like things tend to surprise people. Yet Amazon is thought of as the leading company for e-com, for online buying and stuff, at the holidays, and it's still just I feel like there's talking to companies like that are very large, for me, is less interesting than talking to a small company where I can get to know the CEO well, get to know every problem that they have. As a former analyst, I like to look for the bad and the good, and try to weigh out whether this is an investment or not right now. But no, talking to management is something that a lot of people don't have time to do, and I do that for them, for my clients. We also think that jurisdictions getting to be more and more important, right? We've seen that, certain provinces in Canada are way different than others. You can look at the news flow in places like Colombia that really surprised people recently, and so it's just, trying to have a balanced approach to looking at all these different things that are going on, and it's challenging. That's why there's not too many people that do it well, and I think I would just point out to people that being, to do the work now, right? Don't do the work in summer of 2020 when everything is going through the roof. That's not when you do it. You do it when no one else wants to do it. And that's what we did through November and December, and it's paying off.
Okay, well, that sounds like a great note to end on. Thank you so much for coming by to talk about what's going on in the precious metals and other sectors. Great to have you as always.
Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is John Feneck with Feneck Consulting.